Good afternoon, traders. Future here at FutureMeDead.com. This is going to be a tutorial on how to properly manage your stop loss levels in a trending market. There are two major trends so far this year. The first is the persistent decline in commodities across the board due to the stronger dollar. And the second is the relative strength of the biotechnology sector. This video is going to focus on crude oil, WTI, because I cover this on a weekly basis in the weekly 5 newsletter, and two, we happen to know that it's in a persistent downward trend. So let's begin by defining what is a downward trend. The basic definition is a series of lower highs and lower lows. So let's focus on the beginning part of that definition, which is a series of lower highs. So we know crude topped out in the beginning of May, and since then, staged several failed attempts to take out this one price point, okay, creating exhaustion, and in the process, creating a series of lower lows. Once this breaks support, let me backtrack. This is the first clue, and you need to be paying attention if your bias is still to the upside. Okay, it's very important. Once this breaks support, and let's identify support as this level right here, because there were 3 stabs at this point. You can see that price bounced 3 times. So this is certainly support. Once it breaks support, you can initiate a trade here. You can enter into a position with a stop at the most recent high. Let's color this one green, and so we can differentiate it, and we'll move it along. Whenever price breaks support, always expect a retest of this support. Okay, I try to hammer that home whenever I do analysis, even on individual stocks. You can see here we went lower, and there was a retest. Even though it went higher, eventually failed shortly after. Okay, making a new leg. Once this new leg is over, there's going to be a retest of the previous low that was just broken. Right there. You can see in the new leg, once it's done, there's going to be an upward test, and that previous low is going to serve as resistance. Once this is tested, you are to move your stop loss to the next swing low. In this case, from just about 61.50 to about 59.75 or so. Okay? And the trend continues. This is the same pattern that we're going to follow. Even here, this is my new school, but even here, you can see there's a retest. Now we know this is resistance, probably because laterally, there is resistance here. If I were to extend this forward, there it is right there. Okay, so we know the area surrounding 57 is important. And we see a new leg lower. At this point, we can move our stop just above the next swing high, just to 58. At this point, you are locking in a small portion of profit. Okay, and before we continue, you need to think of these 3 steps in order to manage your stop. You need to identify your risk. You then need to eliminate risk. And what that means is to bring your stop loss to break even, and it's now a free trade. And then the last step is to lock in profits. Okay, so number 1, identify risk. Number 2, eliminate risk. Number 3, lock in profits. Moving forward, we encounter a gap. Okay, this gap here is not an exhaustion gap. This is a breakaway gap. In the world of Elliott wave, this is a Prector point or point of recognition. This is usually found in a third of a third wave. This means acceleration to the downside. Okay, so you're going to let price continue in the direction that we encountered the gap. Once a retest or an attempt to fill this gap is underway, you need to lower your stop. Once again, just above the gap. Remember, gaps, there is always an attempt to fill the gap. That is one of the most basic and consistent things I have seen across all markets. Moving forward, same thing. Identify support. You can see this was the attempt to fill the gap. It was failed. This is the first time we're actually trying to base here too. Investors at this point are not sure if this is just a pause in a new downward trend, or if this is going to bounce from here. Possibly this is probably the 61.8% retracement level, give or take, or the 50%, which is a usual retracement point. This is why you have this indecisiveness. Give it time and the trend will reveal itself. You can see we broke support, and just like before, on several occasions, we are retesting this broken support. It is now resistance. We are now moving our stop to the next swing high. Okay, you're going to let this go down. Whenever you see the next counter trend move, bring your stop lower. If you inject Elliott wave here, you know that counter trend moves unfold in 3. This is a 3-wave move. Okay, so what that's telling me is that once we went lower and actually took out this middle point, I already knew that this low was not the bottom. Okay, remember, and let me take a pause and inject a quick Elliott wave lesson here. In a bull market, you're going to see this pattern. This is an impulse wave. The corrections in a bear market will unfold in 3, in ABC, against the trend. Let me get rid of this. In a bear market, it is the inverse. The impulse wave will unfold to the downside. The correction will be a rally, will be a counter trend move to the upside. Okay, clearly this is what is happening here. So we have this clear 3-wave move to the upside. Once we make a new low, once again, breaking support, we are going to move our stop lower. Expect a retest of the previous swing low. This is now resistance. Keep your stop here. We are presently working lower in the next leg lower. My stop right now is just above 49. Okay. Once this goes lower, and it may bottom out soon temporarily, I'm going to move my stop to the next low, 46 and change. Using this method, you're going to be able to capture the bulk of the move. Now, this comes at a cost of picking the very bottom, which is fine by me. Remember, your job is to make money. It's not to pick tops and to pick bottoms. Okay? So, and you can notice I just moved my Elliott wave labels aside. This is where I was expecting wave 3 to end. Clearly that's wrong, and it doesn't matter that it's wrong because I'm not trying to pick a bottom here. I am enjoying the fruit of my labor by managing my stop and over time increasing my profit. This is how you let your winners run, or some people say let your profit run. This is how you do it. This is how I approach the concept of taking profit. Okay. When I first started, I tried to pick tops and bottoms in almost every trade. And of course, the market will teach you over time that all the concepts that you've previously learned up to that date are erroneous, and you need to change in order to take advantage of the market. We can't play hero and pick tops and bottoms. I don't know how many times I have to say that. I've been bearish in crude. I continue to be bearish in crude. My longer term Elliott wave counts have targets in the 30s. And so this is also a lesson on how to use the Elliott wave labels on my charts. You know, certainly have a basic knowledge of Elliott wave. You know, sometimes it's very specific in identifying targets. Sometimes it's just a roadmap. Okay. So this is my approach to taking profit. Once this bottoms out, we're going to see the same thing we saw here. We're going to see a series of failed attempts, but to the downside. There is nothing resembling that right now. We are in a persistent downtrend. Okay, so until we get that, continue to look lower and continue to be patient by locking in a portion of unrealized gains by moving your stop loss. So that's it. Hopefully I'll expand this at a later time. If you guys have any questions, by all means, go to FutureMeDead.com, send me an email on the contact page. My email is info@FutureMeDead.com, or add me on Twitter @FutureMeDead. Best of luck.